Hello traders, and welcome back to the Forex Geek, where we dive deep into the tools that can help you make smarter trading decisions. In today's video, we are going to be talking about the ADX momentum strategy, which is a method designed to help you identify the strength of trends and time your entries and exits effectively. Stick around until the end to learn how to use this strategy step by step and avoid common mistakes that can derail your trades. So without wasting any much of your time, let's get started. So what is the ADX momentum strategy? This strategy revolves around using the Average Directional Index, the ADX, to measure the strength of a trend and identify optimal trading opportunities. The ADX itself ranges from 0 to 100. This is the ADX, and it ranges from 0 to 100 with higher values indicating stronger trends. However, it does not show the direction of the trend, only its intensity. To complement this, the strategy incorporates two additional lines, as you can see, the green and the red line. Now, these lines are the positive directional indicator, which is the plus DI, and the negative directional indicator, the negative DI, minus DI, which helps to determine the trend, whether it's upward or downward. So when the ADX is below 25, as you can see, this you have here is the DI, the positive DI and the negative DI, and also the ADX. Then we also have the level. In this case, we are using 25 as our level. Now when the ADX is below 25, remember the blue line, this blue line right here, this line is our ADX. The green line is the positive DI and the red line is the negative DI. So I'll show you how to use this to trade the ADX momentum strategy. So when the ADX is below 25, it signals a weak or range bound market, making it unsuitable for trend following strategies. As the ADX rises above 25, it indicates a strengthening trend and traders can begin looking for opportunities. A key signal occurs when the positive DI crosses above the negative DI, while the ADX is rising above 25. This suggests an uptrend with strong momentum. As you can see here, we have the ADX crossing above the 25 level here. Remember, this line is the 25 level. Let me just make it a thick line that runs all the way through. Okay, now we can see that line clearly. Now you can see the ADX, which is the blue line, crossing above the 25 level, and the positive DI is also above the negative DI, and this indicates that we should be looking for buying opportunities at the same time, which is what you can see here. So it means that we should be looking to enter buy trades, as we've seen this ADX crossing above 25 and also the positive DI above the negative DI. Conversely, if the negative DI crosses above the positive DI under similar conditions, it indicates a downtrend. And you can see this here. This is properly displayed here, where we have the ADX crossing below the 25 level and also the negative DI crossing above the positive DI, indicating a downtrend. And at the same time, we can see in price that they're giving us this downward push, this push to the downside. You can see this long red candle indicating that yes, sellers are indeed entering these markets, and we should be looking for maybe a break of structure to the downside to confirm our bearish movement. We can be looking for a break of structure to the downside to confirm our bearish movement before we take a sell trade. So this is exactly how you can use this strategy. This strategy also helps validate breakouts. For instance, if a price breaks out of a consolidation zone and the ADX rises above 25, it confirms that the breakout has sufficient momentum to sustain a trend. Without this confirmation, breakouts may be false and lead to losses. So you can use this approach to avoid trading in weak markets and focus on trends with higher potential. So by combining trend strength ADX with directional signals, the positive DI and the negative DI, you can gain clarity on when to enter or exit trades effectively. As you can see here, we have a ranging market, just like I explained. This market is a ranging market. You can see the box. This right here is a ranging market, and we can't exactly take a trade here until we saw this trend starting and we had this breakout of this level, and you can see it. The ADX confirmed that, giving us a push above the 25 level, and also we have the positive DI above the negative DI. So this helped us confirm this breakout, and we are looking to continue in the upside. So that is exactly how you can use this strategy to avoid false breakouts. So let's just get straight to it. Let me just show you how to approach this strategy. The first step is to put your ADX on the chart, your ADX indicator. To use the ADX momentum strategy effectively, you start by setting up your chart with the ADX indicator. The default period for this ADX is the 14 period, as you can see here, and it works well for most time frames, but you can adjust it. I'm on the 4-hour time frame right now. You can adjust it based on your trading style. You also need to monitor the positive DI and negative DI lines alongside the ADX to identify directional trends and their strengths, just like I've showed you. So for entry points, combine the ADX signals with price action. In an uptrend, wait for the price to break above resistance levels before entering a buy trade. For example, if I'm to take a trade using the ADX momentum strategy, I should wait for price to break a major resistance level like this. Price, you can see price, this was a major support level that was broken to the downside, and this area, this is a resistance level. As you can see here, have price giving us touch here and here, and you can see price breaking above this resistance level. We have minor pullback and the continuation. And if we look at our ADX indicator at the same time, you can see here the ADX going above the 25 level, and also the positive DI being above the negative DI, and this is an indication to take a buy setup. So this is exactly how you can use this ADX momentum strategy. Wait for a breakout above resistance and look to take a buy trade, and conversely, if it's for a sell trade, you should wait for a break below support before you take sell trades. For example, look at this. We have this as a major, we have this as, okay, let me look for a better example to use to explain this. So we have this as a major level, a major support level. This is a major support level, and in an uptrend we expect support levels to push price higher, but here we have price going below the support level, and we can confirm here with the ADX going below the 25 level right here, and here at the same time we have the negative DI being above the positive DI just for a short while, and this could indicate a potential area where you can just take a short-term short trade, just stop loss just above this high, and you'll take profits all the way down. You can hold this trade for just a short period of time for a 1.153 risk to reward ratio. Okay, let me look for another example. You can see here was a major support level, price broke here, and at the same time you can see we are below here. Price went below the 25 level, the ADX went below the 25 level, and the negative DI is above the positive DI. So this indicates bearish momentum is in play, and we could just look to take a short trade when price comes back to retest. As you can see, price retested here, so we just take a short trade as price retested that area, that stop loss just above this high, and I'll take profit at this low right here. Okay, I'll take profit at this low right here, and this is a 1.2.49 risk to reward ratio. So by following these steps, you can identify strong trends and time your entries and exits more effectively. Always ensure you're trading in a market with sufficient momentum to support your strategy. Alright traders, we've come to the end of today's video. Engage with us in the comments below. We want to hear about your experiences. If you found this video helpful, don't forget to like, subscribe and turn on the notification bell so you never miss out on more trading tips and strategies. Thank you for watching, and I'll see you in the next video.